Alan, I have been learning salary and payroll, but now I see this topic about dividends and administration. What exactly are we going to cover here?
That is a great question, Raj. In tax planning for corporate owner-managers, this topic focuses on how dividends are actually handled in real life.
So this is not just about saving tax anymore?
Exactly. This is about execution, how dividends are declared, how they are documented legally, how they are reported for tax, how rules like TOSI apply.
So this is where I learn to handle client situations properly?
Yes, this is where you move from theory to real-world professional practice.
Before we go deeper, what exactly is a dividend in simple terms?
A dividend is a distribution of after-tax corporate profits to shareholders.
How is that different from salary?
Dividends are not employment income. There is no CPP. There are no payroll deductions. There is no T4.
So how are they reported?
They are reported on a T5 slip and taxed as dividend income personally.
If my client wants to take dividends, can they just withdraw money?
No. This is one of the most common mistakes. You must first review the share classes.
Why is that important?
Because dividends can only be paid if the shares allow it. Some shares have restrictions. Some have caps. Some have priority rules.
So I need to check the minute book?
Always. Never rely on what the client tells you.
How do I decide how much each shareholder gets?
You do not decide per person. Dividends are calculated per share.
Can you explain with an example?
If total dividend is 100,000 and there are 100 shares, then dividend per share is 1,000. If one shareholder owns 60 shares, they get 60,000.
So it must always follow ownership.
Yes, and each share class must be calculated separately.
I keep hearing about TOSI. Why is it so important?
TOSI changed dividend planning completely.
What does it do?
It prevents income splitting using dividends. If TOSI applies, the dividend is taxed at the highest rate.
So tax savings disappear?
Exactly. That is why you must always consider TOSI before recommending dividends.
Who does TOSI apply to?
It applies to related individuals, spouses, children, family members, holding companies.
Does age matter?
Yes. Under 18 is automatically taxed at the highest rate. Age 18 to 24 has strict limits. Age 25 and above has more flexibility.
TOSI feels complicated. How do I simplify it?
Use the TOSI train concept.
What does that mean?
Assume everyone is on the train first. Then look for an exception to get off.
So I do not assume they qualify automatically?
Never. You must prove they qualify.
What are the main ways to get off the TOSI train?
There are three main exceptions: excluded business, reasonable return, excluded shares.
Do I need all of them?
No, only one is enough.
How do I handle such complex rules in practice?
You use structured tools, reference charts, CRA guidance, tax software.
So I do not memorize everything?
No, you follow a process. Identify income, check age, Test exceptions. Document results.
Which TOSI exception is most common?
The excluded business test.
What does it require?
The person must be actively involved in the business, typically around 20 hours per week.
Does past involvement count?
Yes. If they worked 20 hours per week in any 5 prior years, they can still qualify.
What if someone does not work full-time in the business?
Then we consider the reasonable return test.
What is that based on?
Capital invested, work contributed, risk taken.
So the dividend must make sense economically?
Exactly. It must be similar to what a third-party investor would receive.
What about the excluded shares rule?
That is a more technical rule.
What are the conditions?
The shareholder must be 25 or older, must own at least 10% voting in value. The company must not be a professional corporation. The company must not be mainly a service business.
So it does not apply to most small businesses?
Correct. It is limited in practice.
Once I decide dividends, what is my next step?
You must prepare instructions for the lawyer.
What should be included?
Dividend per share, share class, declaration date, payment date, total dividend amount.
So this is for legal documentation?
Yes, the lawyer updates the minute book.
Why is the minute book so important?
Because dividends must be legally declared.
What happens if it is not updated?
The dividend may not legally exist. Future transactions can become complicated. CRA or lawyers may question it.
Can I update the minute book myself as an accountant?
It depends on the situation.
How do I decide?
If it is a simple single-owner company, risk is low. If it is a family business, risk is moderate. If there are unrelated shareholders, risk is high.
So what is best practice?
Prepare instructions and let the lawyer finalize.
How often should dividends be paid?
There is no strict rule.
What is common in practice?
Annual payments are most common. Some clients use quarterly payments. Some take dividends as needed.
So it depends on cash flow and planning?
Exactly.
Are there payroll remittances for dividends?
No, there are no payroll remittances.
So how is tax paid?
The shareholder pays personal tax, either through installments or at year-end.
I have heard about eligible and ineligible dividends. What is the difference?
It depends on corporate income type.
Why does it matter?
Eligible dividends are taxed at lower rates. Ineligible dividends are taxed at higher rates.
So I need to classify them correctly?
Yes. This affects T5 reporting and personal tax.
How do I report dividends at year-end?
You must prepare T5 slips. You must file a T5 summary. You must report income on the personal return.
Is there a deadline?
Yes. End of February.
If a client takes only dividends, what happens to CPP?
There are no CPP contributions.
Is that a problem?
It can be. They may not build retirement benefits.
So I should discuss long-term impact?
Always. Compensation planning is not just about tax today.
This topic feels complex. What should I focus on as a beginner?
Focus on structure and compliance. Always review share classes first. Always calculate dividends per share. Always consider TOSI before recommending dividends. Always document properly and involve lawyers when needed.
So dividends are not simpler than salary?
No, they are just different. And mastering both makes you a strong tax advisor.